Midweek stock update. You live for this, don't you? Let's get on with it, people. Don't forget the campaign for $1million.com. So where are we? Well, obviously everything on a price earnings ratio, share price compared to the profits those companies are making, everything still looks expensive with the exception of the banks. We'll get to those later. And of course the energy companies look cheap, but would you really want to get into energy companies during global financial, well, a bit of a cost crisis, worries about recession and falling energy prices. So that's why, you know what, PE ratios are not the only thing we look at. What about performance? Well, it's not actually been the tech companies for a change leading the charge, although Meta has. Why? Well, 100 million users on Threads is one reason. That's a whole new money stream they've created out of thin air. Okay, it's what you can do when you've got unlimited money and you can hire anybody. You come up with ideas. How long before Apple get into the social media space? Software, CRM or Salesforce, some of the ones which have been lagging up till now have done better. Basically, a lot of green, which is fine, including energy. But don't be fooled into thinking, as I said, that's a positive necessarily. It just means that there must be some poor companies rising. So we've got to be stock pickers, not just let's buy any old thing. Price earnings growth ratios, you want that number to be below 1 for it to be undervalued because it's a measure of the share price relative to growth in earnings. Now, the interesting bit, let's get into this. And the interesting bit is, how have we done so far this year? 38% on NASDAQ. That means some of my students have doubled their pensions. They've cherry-picked some of the NASDAQ stocks. They've been younger people. Some of them have done 2 times leverage, and that means they've got even better returns. Some of the risk-averse people will probably only just match the NASDAQ or be somewhere between the S&P, which is up 15%, and NASDAQ. If they're risk-averse, those are really going to be the 60-year-olds, 70-year-olds. But those in their 30s and 40s have doubled their pension. And, you know, wow, didn't that make up for last year? Did I see that coming this year? No, I didn't. What do you think? I've got some kind of witchcraft crystal ball? No, I can't see into the future. Or can I? No, I can't. Or can I? No, seriously, come on. FTSE 100 is up only 5%, which is why my UK friends keep complaining to me how their pensions suck. And I say to them 3 words every single time. Great investments program. Anyway, enough of that. S&P 500 is continuing at a rip. And, you know, for the people who are confused, like the hedge fund managers who are confused why it's continuing at a rip, it's really, really simple. Now, don't tell them this because, you know, they get paid enough as it is. The monthly MACD is doing that. It is going to continue doing that. You might get the odd day when this goes up and this might decline a little bit, but actually this is what rules the roost. Now, I've done enough research on that to know that. Is it my little secret? Not really. I've published it in 18 books and in 8 different languages, that whole point. Will people listen? Some do. We call those the wealthy people because they make a lot of money out of listening. For FTSE 100, you can check my YouTubes and Telegrams, you know, as you've seen, and my TikToks. As you see, that's falling, and I've been saying it's going to fall for a while, and the downward pressure is going to continue. And why do I know that? Well, I can't see into the future, as I said, contrary to newspaper allegations. No, I can't see into the future. It is this, okay? It is this. It is the monthly MACD, which is my secret weapon. There's a bit more to it than that. But I'm simplifying things. I'm simplifying things not because I think you're simple people, but because time is short. And hopefully you've got better things to do. Now, what does that mean, Alpesh, in Apple? Does that mean we're about to see a massive pullback all the way down to this channel? Well, you're going to get a bit of pullback, I can tell you that, because look, this is what could easily happen. This is what could easily happen. And so you'll get a bit of a scare before it goes back up. And that scare could take you all the way down to here. So don't be surprised if Apple drops $20. My point is, I wouldn't be worried if it drops $20, okay? And that's going to be a similar story to many of those. You know what this chart is, don't you? That's the current share price. That's the average analyst estimate. That's what would happen if the average analyst was correct. That's the high analyst. I'm not going to go through it all on this midweek update. Now, you can see with Alphabet, it's a bit further along than Apple in those declines, and they've happened sooner. And you can see when they happen sooner, the weekly stochastic starts falling. The monthly stochastic can still rise, and the monthly MACD is the slowest too, and the weekly MACD starts to fall as well. So that's going to give us an advanced clue of what will happen with Apple. All right. Those figures you can see, analysts all very much still like it, and Microsoft, which I still like, you see that, right? And similar kind of story, downward, downward, downward. Is it something to worry about? No, you could see these falls, so get ready for those falls, but don't panic. You won't need to change your underwear just because those falls occur, okay, for now. I'll tell you when you need to change it. We've got our updates for that reason. Amazon, similar kind of story. There you go. Now, that's got a long way to go, and I see this being a bit more bullish. Certainly don't see it falling all the way down to there, obviously. Might get a bit of profit taking before it continues upwards. All right, and that's the story with what the analysts think, who just love it. Analysts are simple people. They love what everybody else loves, except you get one dozy one who wants to be the outlier because they're going to quit their job anyway or be sacked. There's Disney, pretty flat, right? Alpesh, what? How come everything didn't touch the gold that you touch? It might, but I still hold Disney. I don't mind. I can't just have tech. People will just think, well, the way you make lots of money, it's not that hard, is it? You just bought tech. Well, yeah, all right. NVIDIA, now I've said to you before, what's the issue with NVIDIA? I'm not going to repeat myself. If you want me to repeat myself, go look at this video, midweek update from Telegram channel last week. I won't repeat myself on what you should do on NVIDIA. Look at my Telegram channel. alpeshpatel.com/links is where you'll find it. Right, and there's the numbers for NVIDIA. Obviously, some being very positive on it. Tesla, yeah, if you like your volatility, that's the only thing with Tesla is the volatility. And whilst it should rise, it's the kind which can rise, look, and give you a heart attack in the interim. Just look at that. That can happen again. All right, don't think it won't. It will. So it can do this and then go back up. And you'll say, oh, I don't mind if it falls. Trust me, you'll be throwing up, double-backed into a toilet bowl when it falls like that because you'll have over-leveraged. So just be careful of the risks. We still like it because we don't over-leverage on it. Okay, there's Tesla. Or if we do put a lot of leverage on, then we watch it like a hawk because we don't want to get caught with our pants down. So a lot of references to pants. Been watching too much BBC. Meta, right? You can see going up there, and that's the high. What have we got? Boom. That's the direction I'm looking at. Obviously, there's going to be some profit taking with that as well. So be warned. Chipotle, there's going to be some profit taking here. So if you're risk averse, you say, look, thanks, Alpesh, you made me all this money this year. I'm just taking the next 6 months off. And we're sending you free tickets around the world as well, Alpesh, in first class. Thank you very much, I'd say. But equally, I might say with this, yeah, if you're risk averse, you'd sell. If you're risk loving, you'd wait. All right, it's as simple as that. You've got to ask yourself first, what's your own risk appetite? I still own this, still have no problems with it. I still like it. All right. So that's service now. That's your midweek update, folks. Hope you liked it. Don't forget Telegram and YouTube and TikTok, all the rest of it. alpeshpatel.com/links. If you don't watch anything else all week, watch this update. Thank you.